Welcome to Pro Webcast News, where we bring you daily industry updates. Today is Thursday, January 28th, and you're watching the Afternoon Update with Paul Wilson. Today's news is sponsored by Tucker Advisory Group, teaching both clients and financial advisors powerful, safe money strategies. For more information, please visit tuckeradvisorygroup.com. Now for today's headlines. President Barack Obama's first State of the Union address reaffirmed his strategy for creating new jobs, addressed the healthcare issue, and sought to end the quote-unquote tired battles between Republicans and Democrats. Obama explained his decision to support taxpayer bailouts for banks and auto companies and reiterated his continued support for the middle class as opposed to bank executives. He also said that he would work on programs that were smaller in scale than those sought a year ago, as the national deficit continues to skyrocket. Quote, "We have finished a difficult year. We have come through a difficult decade, but a new year has come. We don't quit. I don't quit." Unquote. Finally, while he promised to continue to push for healthcare reform, he said that job creation would be the #1 focus in 2010. In related news, President Obama used a portion of his State of the Union address to call for increased taxes on investment fund managers, oil companies, and those making more than $250,000 a year. Quote, "I know Wall Street isn't keen on this idea, but if these firms can afford to hand out big bonuses again, they can afford a modest fee to pay back the taxpayers who rescued them in their time of need." Unquote. In addition, he said the U.S. is in need of financial reform and must protect itself against the actions that led to the recent recession. A small business tax credit would go to 1 million businesses that hire new employees or raise wages, while the proposal would also eliminate capital gains taxes for investments in small business and tax incentives for those businesses that purchase new plants and equipment. He also said that he would end tax breaks for companies that send jobs overseas, while providing them for those companies that create jobs in the U.S. In regulatory news, the Securities and Exchange Commission recently adopted new rules that will require money market funds to disclose on a delayed basis their fluctuating shadows net asset values rather than their $1 per share value. Under the new rules, money market funds will be priced at the $1 per share value, but will also be required to report their floating value based on the market value of its underlying securities after 60 days. The mutual fund industry has largely opposed the new rule, saying it could cause a run on the funds when values decline. Meanwhile, advocates of the move say that requiring funds to disclose a shadow net value on a delayed basis is a step towards transparency. I'm Paul Wilson, and thanks for watching Pro Webcast News. For more in-depth news and features, visit producersweb.com.